Ina masetting
Okay. Good morning once again, and welcome to our show, the virtual exhibition of the capital market operators. We'll go straight into our presentations. My name is Talimwala Mugala from the Securities and Exchange Commission. And our program for today, we will have a first presentation from the Securities and Exchange Commission. So we'll go straight into it by Dingase Makumba, and then the next presentation will be from the Lusaka Securities Exchange, and then we're going to meet one of our operators in the market who is a trustee. And then we're also going to have another presentation on the secondary trading of government securities from another operator in the market. Okay, we can start in that order.
Good morning, everyone. Madam Moderator, are you sure we can start with just almost in 10 people? Or will you give it a bit of time to see if we are going to be joined by a larger audience? Or we do have an audience on Facebook, so probably we can start, huh? Okay, I'll just then prepare to share my screen. Could I just be given the rights to share my screen, please? I must admit, we could be having a few technical glitches, and that is why I would like to see if we can give a bit of maybe just 3 minutes to allow people to register when joining. Stanley, what do you think about that proposal?
Yes, we can just wait a little bit. Sorry, we're having a little technical difficulties concerning the link. So we're just trying to correct that. Just give us a few more minutes.
Nti okubika pena nkufina pena manager equipment allocation nate tina fina okusayina nti isigire change sayina shishire na mashitire you know what I mean, you know.
Oh, all right, I think we can start now. Good morning, everyone. My name is Dingase Nunkwemakumba. I'm talking to you from the
No, today is Thursday, but you're reminding me today was Thursday.
Okay, could we all please mute our mics? Thank you very much. Good morning, everyone. Once again, my name is Dingase Nunkwemakumba from the Securities and Exchange Commission. I would like to welcome you to the World Investor Week, which is started on Monday and will be commemorated through to the 10th of October. It's an interesting one. We are in the COVID times, and so what we would have held physically, we are now trying to hold virtually. So we really hope that we are going to succeed at this. And we really just thank God for the technologies that we have so that we could at least keep going with our objective to engage investors and engage the public on matters of financial education, and in particular matters of the investments in the capital markets. The World Investor Week, my presentation will be outlined as follows. We're going to look at the background to the World Investor Week. We then look at the objectives. Why are we undertaking the World Investor Week? We shall then look at the target groups for this campaign and the timing. We'll talk about it a little bit more, and also the proposed programs during the week. And also, we are going to look at and try to understand what the key message is for this commemoration. So the World Investor Week is an investor education and awareness campaign. It was launched in 2017, spearheaded by the International Organization for Securities Commissions, IOSCO in short. The IOSCO is a securities commission. It brings together regulators from different jurisdictions around the world and sets standards that must be followed in order to regulate the securities industries. By doing that, it encourages harmonization of standards so that countries, as we cross borders, we can not have serious departures from what would pertain in one jurisdiction in as far as investments are concerned, and also the rules and regulations that govern investments around the world. The implementation, the world body will set the standards, harmonized, and this is obviously done in agreement, but bringing it to our local industry, like in Zambia, the spearheaders will be the securities regulators, and that is why the Securities and Exchange Commission is spearheading this World Investor Week. In Zambia, before I move on, we have the Capital Markets Association of Zambia, who are the industry association, and so they speak the voice of the industry in the voice of those who are operating in the market. So we commemorate in collaboration with them. The objectives of the World Investor Week is to disseminate messages that further investor education and protection, as well as financial literacy. It also aims to foster learning opportunities for investors. So we really do hope that those who are already investing and those who would want to invest are listening in. And I would like to encourage that at the end of the presentations, our listeners will ask as much as they can, as in fact, investment advice comes at a cost, as you may be aware, but today it will come without that cost. It will be free of charge. So I would like to encourage everyone to ask. Those will be available as much as possible. Who are our target groups for the World Investor Week? It really crosses across all segments of the public. We do have the children. You might want to ask why the children who are not even yet in gainful employment. But of course, it's about fostering knowledge and preparing these children for future investment. We want them to become aware of what options they have already, and we want them to be inculcated in this behavior. They should already know that investment comes with the benefits, it comes with risks, it comes with there's need to input into the children certain behavioral aspects that are going to help them to become capable of investing and making certain financial decisions for themselves and of course for their families, and be able to advise those around them. We have the youth as well, and with the youth, it's also very important as we prepare them for their working life, and be it in formal employment or informal employment. We want, for the same reason as the children, we want to inculcate certain behavioral aspects in as far as finances are concerned, financial management. We cross-cut, we don't leave out the adults. These are those who are already in employment, and some are on their own. But as long as everyone manages finances in one way or another, we target them as well, and we would like to impart knowledge concerning finance and increase their financial literacy levels. The theme for the World Investor Week, the World Investor Week was started in 2017, so it's been running. This is the 4th year now. It started with the theme, A Smart Investor. In 2018, it became a smart investor through capital markets, for the reason that we would like now to focus on what opportunities are embedded in the capital markets and how the public can benefit from them. In 2019, we carried the same theme. This year, we have made a slight tweak to the theme, and we are calling it Be a Smart Investor Through Capital Markets, for the reason that we want the public to take ownership for themselves and change behaviors towards investment. The timing of the World Investor Week, this takes place annually, and every year in October, especially in the first week of October, we commemorate the World Investor Week. Otherwise, the World Investor Week, you see it running around the world through to November. So it's an October to November event. Our proposed programs for the World Investor Week, we have press releases, the IOSCO being the main body that is organizing the World Investor Week, initiating it, issues a press release, which we, as local spearheaders, we also issue press releases. And so we engage the press to help us disseminate the messages that are coming out of the World Investor Week. We do have ministerial launch. This is when the minister declares a message at that level. We haven't had this one this year, but we have had a launch at industry level, which took place on Tuesday this week. We had the official opening by Mr. Philip Chitalu, SEC Chief Executive Officer, as well as the President of the Capital Markets Association. I hope everyone was there. We do undertake public exhibitions. Like mentioned earlier, we do go to different places, like public malls, where we capture as many walking through people as much as possible. We advertise these programs on the radios and wherever we can, in the papers. So we do avail ourselves to the public so that they can come and ask as many questions as they want and learn about issues of investments. This year is a unique one. Due to the COVID-19, we are operating under the guidelines of the Ministry of Health, and so we are avoiding physical interactions, and that is why we have brought this exhibition to a virtual forum. We do have a symposium. You might want to know about some of the efforts that we are making in the capital markets, out of acknowledging the fact that financial literacy levels are not as high as we would like them to be. So we think that going through the educational system, entering the syllabus, is what would really help to widespread the message. You may agree with me that whatever we learn in class really sticks in our minds, and especially when we learn it at a tender age. As the adage goes, we learn from birth or from the cradle to the grave. So we want to embed the messaging of capital markets, investments, or financial literacy generally into the syllabus, and we have started doing that already. It's quite at an advanced stage. And now we can hear our children talking about savings, talking about investing in shares and bonds. They're learning about those things, and we hope that in 5 years to come, it will be a different picture altogether. We do hope that we'll have a time, there will be a time when the discussion will really change. It will be about watching the price on the stock market. It will be about what financial products are happening or are doing fine and so on. So we have before, and this must have been, I think, the previous year when we called all the teachers. We have acknowledged that a number of adults are not yet very knowledgeable about financial issues, and we start with those who are going to be teaching these subjects. And so we called business teachers to a symposium and just explained those things that we have put in the syllabus so that they start with appreciating them and then they'll pass them on to the learners in schools. We do undertake various media programs, radio programs. We do go on TV during this week so that just we bring some hype to the World Investor Week messaging. This year, we have planned the programs that you are seeing on the screen. We have, I've already talked about the ministerial launch and the social media launch, the virtual exhibition, which has started today and will be going on until tomorrow. We're going to have a university discussion forum as we try to engage the youth. We really work with universities quite a lot, and we are happy that they are quite glued and interested to issues of investing or investor education. We have already started actually publishing articles, and we're going to have publications around the World Investor Week. There's going to be capital market growth milestone presentation, which will be spearheaded by the Capital Markets Association of Zambia. We may not have the recognition of CMO to come later in the year, but we will have executive school adoptions, a different number of schools, not only in Lusaka, around, I think we have Kitwe, schools in Kitwe, in Pelembe, and other schools around Lusaka are going to be approached, and talks will be held with these learners. We're going to have an essay article competition. Again, this is going to be implemented through universities. There are about 3 universities that have signed to this article competition. We are going to have a LUSE walkthrough. The LUSE is the exchange in the capital markets. It's the Lusaka Securities Exchange. It is the market that brings together investors and issuers of securities uh, such as shares, and they have other products as well. So they have a program where they walk through, especially learners in schools as they learn about the stock market, and they are going to undertake this program even this year. We have radio programs, and we have messaging sent through our social media platforms such as Facebook, the website, Twitter, and LinkedIn. What are the key messaging that we are going to be sending out through in this World Investor Week? Um, we want people to become smart investors, and people become smart investors when they appreciate certain investment basics. So we want the investor to be able to verify that an investment professional is licensed. There are so many um, uh, proposals coming our way nowadays. A lot uh, uh, different ways that people are wanting us to invest. It could be through network marketing. It's coming through really, really different ways. But one thing that an investor can do in a smart way is to verify that that person who's advising you to invest in a certain financial product is licensed, because financial advice comes with knowledge. It has to come with somebody who's capable, assessed as fit and proper to provide that advice. And this is what some of the things that regulators do, and the Securities and Exchange Commission licenses investment advisors. So if you are approached by a professional or somebody working to you, offering you to put your money in a certain financial product, first of all, you must be able to ask if that person is licensed, because not everyone can advise. So you ask, we do have uh, how we say it, seek advice only from an investment professional. So you can ask for their license. Here in Zambia, you ask for a SEC license. And after that, obviously, you might want to go to the website and just verify, or phone into the Securities and Exchange Commission just to verify if that license is valid. Because at some point or another, this is done annually actually. There's a way that keep assessing whether these professionals are meeting the criteria that they are supposed to meet to become valid providers of investment advice. Conduct research on a product before investing. I really feel delighted when people ask and ask questions before they invest in a certain product. This is how a smart investor behaves. So you must be able to help yourself check if that product is actually authorized by a regulator. Check if the product is doing fine. You how are how is the pricing undertaking, things like that. And of course, I will not say much on these things because I myself am not an investment advisor, and we're lucky that in this forum we'll be interacting with some who are licensed as investment advisors. So the questions that you may have, please ensure to ask them to the professionals who are in this forum and will be interacting with us in the next few minutes. A smart investor should be able to assess the impact of fees when choosing an investment, understand that risk exists in all investments, avoid get rich quick and can't lose schemes. Nowadays, we are calling this greed. If you want to get rich too quickly, you're greedy about making money, it might just scorch you. So it's important to understand that risk exists in every investment, but it's about how you reduce the risk. So all these things are pointing to that aspect of reducing risk, maximizing returns, obviously. Recognize the power of compound interest. Smart investors will always put back the interest they earn to the principal and then reinvest, and the money grows faster. Of course, it depends on that will depend on your objective, which you will identify when investing. Recognizes the importance of diversifications. Not all financial products will obviously perform the same way. Some will be more riskier, and depending on market conditions, in some markets there might be failure. But if you are smart, you have diversified, you reduce the risk of failing when you invest in one basket. You plan for and invest according to your future needs and goals. This is about sitting down and knowing what you want to achieve out of your finances, and seeing where you can best invest in order to meet that objective or goal which you have. You recognize the benefits of long-term, regular, and diversified investment. This is more or less repeating some of the things we have already said. We have special messaging about online investing, digital assets, and initial coin offerings. Of course, this is something that is quite new, but has been happening, but it's also moving very fast and changing into different forms all the time, and can be quite confusing and overwhelming to investors. So we want investors to understand the risks that are associated with initial coin offerings and crypto assets in general, and is careful in deciding whether to invest in these products. A smart investor does not forget about the importance of due diligence when considering investments in online and digital environments. A smart investor recognizes the red flag warning signs of online investment fraud. Some of these come through wanting you to invest very quickly, not giving you time to research. They give you discounts, and in the next 1 hour, if you don't, this discount will go. So a smart investor must see those things and find them suspicious. Never invest based solely on a celebrity endorsement. It is quite interesting that sometimes some of these adverts we see, there's Lionel Messi, sometimes they don't even know that they are on adverts because they're so far away and they might be difficult to control everyone. And because you are a follower of some of these celebrities, you think that that is an endorsement and it is a good product. We must be very careful as investors and not to solely depend on that endorsement, but find out how good the product is. A smart investor knows that most legitimate firms do not allow their customers to use credit cards to make investments. So those are some of the messaging that you will come across, and I hope that everyone will be a smart investor as we move forward. That's the end of my presentation. For more information, get in touch via the numbers on the screen and the email provided, the info@techzambia.org.zm. And on Twitter, follow us at TechZambia. On Facebook, we are there, Security and Exchange Commission, SEC, and on our website as well. Thank you very much for joining us. I give back the microphone to Stali, who's our moderator. Thank you.
Okay. Thank you so much, Dingase, for that presentation and for highlighting what the World Investor Week is about. I'm sure Dingase mentioned that in as much as the commemoration dates date from the 5th to the 10th of this month of October, we are going to carry on the commemorations for the rest of the month of October, seeing as it's investor awareness period. So for now, we're going to move quickly to our next presentation. This is from the LUSE. They're going just to highlight what the role of the LUSE is in this space. I'd like also to welcome other guests that have joined us. If you just joined us, thank you for joining us. And also welcome our Facebook audience. Thank you for joining us. If you have any questions or contributions, please post either in the chat or even on Facebook. We'll attend to them. Vina, you can go ahead.
Thank you so much, Italy. Let me just share my screen. Good morning to everybody. Let me just find my screen. Just give me a moment. Okay, I hope everybody can see my screen. Okay, wonderful. Once again, good morning. My name is Lina Lungu. I am part of the business development team at the Lusaka Securities Exchange. I know quite a number of us are still getting used to that name, Lusaka Securities Exchange. We used to be known as the Lusaka Stock Exchange, but we are now known as the Lusaka Securities Exchange. So I'm really excited to be here today and commemorate World Investor Week with you all. LUSE forms a very important part of the investment platform here in Zambia. And in addition, I think in order for you to be a smart investor, you need to be an informed investor. No investor goes into an investment without knowing or understanding the investment, number one, but also the environment which the investment is, or what the framework for the platform that's offering that investment looks like. So it's important. What I'm going to do today is going to talk about what the Securities Exchange is, just to give us a good idea of what it entails. And hopefully tomorrow, in tomorrow's session, we'll get into the more nitty-gritties of the stock exchange, how to invest, and all the those details. For now, we'll just talk about the framework, the LUSE, what do we do, just to give you an idea and that you are an informed investor. Okay. So we'll move forward. In today's agenda, we're just going to look at what the stock exchange is. We'll look at the LUSE background. Where is LUSE coming from? What are some of the milestones? What are some of the facts about the LUSE? Then we'll go into the capital market structure. Where does LUSE sit in the capital market structure? And who are the other players who form part of the structure? And then finally, a question and answer at the end. Okay. So what is a stock exchange? Okay. Very simply, the image there you see is of a marketplace. It may not be, the stock exchange isn't as chaotic as a marketplace where we buy our fruits and veg. However, there's certain aspects of it or certain concepts which you can are familiar to how a stock market operates. Okay, so number one, it is a structured marketplace. In other words, there's a structure, there's a framework, there's a way, a mechanism in which this market operates. Okay, so there's some structures, there's some rules and regulations that are in place in order for this market to function. Okay. It's usually licensed by a regulatory body. In our case, we are licensed by a regulatory body. We're licensed by the SEC as an exchange. We've got an exchange license from the SEC, which is very important for an investor to know that we are registered, we are licensed with the regulators in the capital markets. And therefore, the instruments or the securities that are traded on this platform are then genuine instruments and instruments that an investor can then invest in. Okay, another aspect of the stock exchange or securities exchange is that we are transparent and efficient. These are key aspects of how an exchange performs. Transparency in a sense that investors are aware and know about what is happening, especially on the shares side or on the equity side, what is happening on the market. They are aware of, for example, the share price. The investors are aware of company announcements that are shared by the company in whom they've invested in. The LUSE issues that information. So we have to be as transparent as we possibly can to our investors or to the investors. We're also efficient. We'll see this a little bit later, but efficiency is a big aspect of how the exchange functions. Trades which happen on the exchange have to happen in a set time or set parameter in order to create efficiency in the market. If there is no set parameter to which these trades occur, it becomes very difficult for example, there won't be proper liquidity in the market. You stifle it, or you'll cause liquidity to suffer in the market. So it's very important that we're efficient in the way that we carry out our operations as well. Buyers and sellers interact. I mean, what is a market without a buyer and a seller? So on the stock exchange, the concept is the same. The stock exchange is the platform to which buyers and sellers come together and interact, okay? So there are people who are buying shares, there are people who are selling shares, there are people who are buying bonds, there are people who are selling bonds. So there's always an interaction between buyers and sellers through the platform or the medium of the stock market, okay? And to that point, to that end, we act as a financial intermediary. We act as the platform or the conduit between the buyer and the sellers in the market, okay? So they may not know each other physically or may not see each other, but there is interaction between the buyers and the sellers on the market. And lastly, there are set rules for an orderly and efficient market. We are incapable of being an efficient market or have some order in the market without some rules in place. We have what we call, for companies who list on the market or who issue shares on the market, our listed companies, we've got the listing rules. The way trades occur, we've got the trading rules, and there's so many other rules which are in place as to how the market will function. So investors on one end can rest assured that because there are rules in place, because it's structured, it's licensed by the SEC, and it's transparent and it's efficient, that the investment products or the investment securities that are on the market, which are being traded, are secure and are indeed investable instruments. So that's what the stock exchange is in a nutshell. We move on now to a bit of a broader picture as to where the exchange sits. Okay, so we've got different types of financial markets within Zambia. We have got the money markets, which most are familiar with. We've got the capital markets, we've got the pension and insurance sector, and then we've got the commodity space. So each one of these have got rules or regulations. They've got acts of parliament, which govern the way that sector is run. So in the money markets, you've got the Bank of Zambia there. In the capital markets, you've got SEC, and pensions and insurance, you have got PIA, or the Pensions and Insurance Authority. Okay, so those are the regulators of those spaces, and they've got their relevant rules. So for us as the LUSE, as mentioned earlier, we sit under the capital markets, and the Securities Act obviously is what governs the capital markets and also governs the LUSE and how an exchange is supposed to perform. So that's just to give you a broad overview about the other markets that play a part in the financial markets in Zambia. So the type of financial markets we've got, again, just echoing what I said in the previous slide, the money markets regulated by Bank of Zambia, insurance, which is regulated by PIA and pensions as well. And then you've got the capital markets. Now, it's very important for the investor to understand, an informed investor is a smart investor, to understand that the key difference between the money markets specifically and the capital markets. The money markets deals with short-term financial instruments, okay, and then the capital markets deals in long-term financial instruments. And I think that's a very important point when it comes to investors, because if you see something which is supposedly offered on the capital markets that is very short-term and boasts of high returns, sometimes it should show a red flag, or it should cause you to stop as an investor and say, look, in the capital markets, long-term financial instruments are the ones which are traded or which are regulated by the SEC. So it seems a bit too good to be true, or this doesn't sound right. So I think it's very important that we see the differences between each of the markets as to what instruments are offered within each of these markets. So that's just a very important point which I thought I should highlight. Then a few facts about the LUSE. We opened for business in 1994. So we have a market where both equity, which is another word for shares or stocks if you want, and debt, which is your bonds, your bond market. So both are traded on the LUSE. As we continue to grow, we're going to start introducing more instruments. Right now, we are working on and looking at a commodities market, which brings in the idea of trading commodities through what is called a warehouse receipt on the market. So those are some of the new instruments that are coming. Then it's the sole market for the trade of treasury bonds or government bonds, if you must. We've got 23 listed companies, so 23 companies on the LUSE that offer their shares to be traded, or they have issued their shares to be traded, okay? So they trade on what we call the secondary market. And then we've got 13 quoted companies. 13 quoted companies simply refers to companies that have registered their securities with the Securities and Exchange Commission. And by virtue of doing that, they become quoted companies, okay? They do not fulfill the quoted companies have not fulfilled the LUSE listing rules to list on the market. They have simply gone to SEC, registered their shares or securities in their company, and they are then deemed as quoted. You've got the listed equity market. We've got the main board, which is for large corporates. And then we have got the alternative market board, which is for SMEs. So we cater to various types of companies that would like to raise capital using the exchange, both on the large corporates and on the SMEs, your small to medium enterprises. There are rules and prerequisites for both markets. Then we've got two dual listed stocks, the local stocks, which are listed not only in Zambia, but other parts of the world. So we've got ZCCM, IH, which is listed in France. And then we've got Zambi, who is also listed in the United Kingdom, in England. So our trading hours, trading occurs on the LUSE from 10 to 2 p.m. Every day, every workday. Not on weekends, not on public holidays. That simply means trading. That does not mean I go to work at 10 and end at 2. That simply refers to the time that trading of securities begins and ends. So it starts from 10 o'clock in the morning to 2 p.m. in the afternoon. Our system, the system that facilitates the trading, is called the ATS, or the Automated Trading System. Is fully automated. Therefore, it's done by computer. It is not, there's no, what you see familiar in the movies which come out, like the outcry system, where people are in the stock market, they're all on the trading floor, and they're shouting and screaming and throwing papers in the air. That is not automated, but what we do at the moment is fully automated. So you simply go to what is called your broker. They'll push the trade through the system onto the LUSE platform, where it is then traded. Then remember we talked about efficiency earlier, how that is one of the traits of an effective stock market. Efficiency in terms of when the trades occur and how quickly they clear through the system, clear and settle through the system, is important. In our case, we call it a T plus settlement cycle. So T plus 3 is our settlement cycle. And T simply means the trading day plus 3 working days. So 3 weekdays, if you will. So when a trade occurs in the system, it should take T, the trading day, plus 3 days for the transaction to complete. Okay, and that's on the equity side. On the bond side, it's T plus 1 for the transaction to be complete. In '98, LUSE became the sole secondary market for government bonds. That's when it started. To date, meaning by close of yesterday, the market cap or the total values of all the shares issued by the companies on the exchange comes to 55.4 billion kwacha. We're still a growing exchange. I think we can expand and do much more. And these are the sectors which are represented on the exchange from the listed companies include manufacturing, telecoms, oil marketing, agri-processing, investments, banking and finance, real estate, energy, and mining. So those are some of the sectors that are represented in the listed companies on the LUSE. The traded instruments, as spoken earlier, we have got on the equity side, we've got 23 listed companies. We've got one depository receipt in the form of First Quantum Minerals, and we've got 13 quoted securities. I have explained quoted securities. I haven't explained what a depository receipt is. In the simplest of terms, a depository receipt is simply a receipt or acknowledgement that an exchange can trade a security or can have a security on their end traded, which is in another exchange around the globe. So in the case of First Quantum, the security receipt was issued to the LUSE that First Quantum would like to make its shares available to trade here in Zambia. And it helps investors that you don't have to trade on the Canadian Stock Exchange for First Quantum shares. You can simply go to the LUSE and trade and buy securities in First Quantum through the depository receipt. We've got debt securities as well, government bonds and corporate bonds. Corporates also raise finance through issuing a bond on their end. So we've got both government and corporate bonds which trade on the secondary market at the LUSE. Moderator, I hope I'm still within the time. We have got listed entities as well. So these are just some of the lists, the entities that are listed. The first listed entity on the LUSE was Lafarge in 1995. It was called Chilanga Cement then. It was listed in 1995. You've got a whole list there then of the companies which followed after, all the way until Zafico, which was the most recent one, and it came to the market in 2020. The beginning of this year. So what is the role of the LUSE? We hear about all these securities which are traded, but to what end and what purpose? Why is the LUSE there? What is its role? Okay. So number one, on the aspect of the companies who list on the market, who issue securities on the market, why is it important for them? For them, it's a source of relatively cheaper, long-term capital. Again, I emphasize the long term, as mentioned in the capital markets, long-term instruments, long-term thinking. So it's a relatively cheaper source of long-term capital. They issue shares. And as you could see, Lafarge has been listed on the market since 1995, and those shares are still on the market. So long-term capital, they're able to raise long-term capital on the market. Number two, it's to encourage local and foreign investment. So on the local side, you'll see in the next point, it's key that we empower the Zambian by, for example, by buying shares in a company, you as a shareholder are able to collect dividends should a company issue dividends, which is empowering to the Zambian in that that's another source of income for you. It's also empowering that you have ownership in a company. As a shareholder, you've got shareholder rights, which you are free to use. It also encourages the Zambian populace to purchase shares because of their benefit. Also, again, look at it from a long-term perspective. There are quite a number of investors who have invested from when they were younger, maybe students, maybe just started work, and have now built a portfolio, quite a large portfolio over time. So there are people and there are success stories. You just need to look at it from in the long run. And as we said, not just looking at it as a quick get rich quick scheme. So foreign investment as well. The LUSE is Also a banner for Zambian and for listed companies that are listed on the market, on this market. Corporates from around the world, because of the data that we send out to our various data vendors around the world. If you've heard of Bloomberg, and Reuters as well, these are companies to whom we send information regarding the exchange. So people around the world, investors around the world can see the activity on the market and can also make informed decisions based on the information that is sent to them. So it promotes foreign investment as well. Provides an efficient, fair, orderly, and transparent market for secondary trading of shares. I think I highlighted this one quite a bit. Being efficient, being fair, being orderly and transparent is a key aspect of being the stock market. It's important for us that we, on every angle, that we are transparent and that we are orderly. And then lastly, we're a barometer for economic activity or economic growth. The LUSA is a good scale, especially for foreign investors, to see what's happening on the market. And that whatever is happening on the market often gives a telling story about what's happening in the economy. Okay, so usually for foreign investors, that's the first point of call. I think even for local investors, it gives a good gauge because there are various industries represented on the exchange. So it gives you a fairly good idea as to if the performance, how the performance of the stock market is. They'll give you an idea as to what's happening within each sector, if you will, and the overall economy in Zambia. So quickly then, coming to the market for a company, you can either go, as a company, you can either go the listed route or the unlisted route. The listed route, you must comply with the LUSA listing requirements. And once you comply and you meet those requirements, you're eligible to list on the market, either through the main board or the alternative market board, as mentioned earlier. You can also be the unlisted route, where you just register your securities with the Securities and Exchange Commission, and you then become quoted, as I mentioned earlier, where you've just registered your securities with the regulator. It's important to note that before you come to list, that the company has to be a public limited company, the PLC, because your shares, obviously shares will need to move from one party to another. The shares need to be liquid in that sense. So a PLC is what you need to be before you come to the market. Can't be a closed corporation, can't be a sole trader, can't be a partnership. It has to be a PLC, and you can't be a limited company. So it has to be a PLC. Almost there. Fair, efficient, and orderly market. Again, emphasis on this. Because in our market, what happens is that there's obviously the forces of supply and demand, buying and selling of shares. That's how the market operates. That's how share prices change. So to ensure that there's fair play all around, to ensure that no investor is disadvantaged at any point, the market has to ensure there's fairness, there's efficiency, there's orderliness, and there's transparency. So with regards to fairness, no one has special treatment on the market. Okay, so whether you're buying 1 share, 10 shares, 10,000 shares, 1 million shares, you are all treated according to the rules which are set in trading procedures, the rules that are set by the exchange. There's nobody who is favored. So it doesn't matter if you're, if you're young, if you're old, if you're male or you're female, nobody has got special treatment on the market. There's efficiency on the market. Again, transactions occur within the least possible effort. Goes back to that T+3, the trading day plus 3 days. It should occur, the trading cycle should occur within that period for us to be an efficient market. Then there's orderliness. There's the use of brokers. Key brokers are the middlemen. Whenever people come to LUSA and say, I would like to buy shares, can I buy shares from here? We always refer them to say, go back to your broker. Your broker is important. They are the middlemen in the market. Not only do brokers push trades in on your behalf or their clients' behalf, but they are important in giving investment advice to the potential investor. So they are important in that space. In addition to that, the broker brokers are registered with the LUSE and also licensed by the Securities and Exchange Commission. Again, that also gives some boost to the investor that these are credible, this is a credible institution, number one, and number two, that they're investing in credible securities. Then transparency, lastly, no information is hidden from the investor or potential investors to create a disadvantage. As mentioned, there's information dissemination from the LUSE. So every day there are reports, every week, every month, every year, and they are all disseminated to their shareholders through the brokers. You can subscribe to information should you wish. Every night on ZNBC News, there are the closing prices of the LUSE from that day. Nothing is hidden from the potential investor. So the investor is in the know of what they should do before they invest. They can make an informed investment decision. Lastly, I think this is my last slide, information dissemination. Again, as I mentioned just now, daily, weekly, monthly, quarterly, and annual reports can be sent out. And then there are specific bodies who request specific information. So government bodies, government ministries, brokerage firms, they can all ask for specific information. We send live data to media institutions, as mentioned, such as Bloomberg and Reuters. This is important for the external investor, those who may not be in Zambia. We do various media interviews for specific issues. The company announcements are sent out again through the LUSE platform, which is called the Sense, the stock exchange news. And then there are company actions and announcements of any form from listed companies, whether if it's a CEO who has changed, that has to be published, whether it's financials, that has to be published. Any news which is of significance to the shareholder has to be announced through the platform and then will be sent to the investors. So it's very important that those are sent out so that an investor can make an informed and a smart decision at the end of the day. I'm done with my presentation. I hope this has been helpful and just being a guide to what a smart investor should, first of all, should understand about the market. And tomorrow, I think I'll put a lot of emphasis on now, how do we go about shares? How do we go about investing? But for today, I thought I should just give a good framework around what it is that we do. Thank you, Sitali. I can go ahead.
All right, Lina, thank you so much for that lovely presentation. I hope it sheds more light on what the LUSE does and how the market operates. And like I mentioned earlier, if you have any questions, kindly post them in the chat as well as in the on Facebook. We'll go straight into our next presentation.
Mama, bear can see. It's hiding.
Oh, is that working from home? Okay, so our next presentation is from our trustee in the market, Dr. Nyambe. I'll allow for you to share the screen.
Good morning. Thank you very much for the presentation from the two speakers already, Dingase and Lina, quite clear, and it's giving a picture of what's happening in the capital market. Thank you so much that you have given a definition of what the capital market is and where it belongs. And also we've seen the other markets as well, with the financial market, insurance market, money market, and so forth, and they've got regulators, and that is very good. But what I'll try and come up with from the topic I was given to deal with, this was to deal with the security. How safe are your funds, especially the public? How safe are your funds? How is that being done? Now try and sort of look at it from the perspective of unit trusts. And the unit trusts they interact with all the markets, in the capital markets, they're in the money market, they're in the insurance market. they're interacting all of this. But one of the things that we like to assure the investors is that we do have the regulator of the Capital Market Securities and Exchange Commission, SEC, and it is composed of technocrats who understand, they're skilled, and they're adequately qualified to carry out that function. Now, and we've already seen, well, I hope tomorrow Lina will tell us about the difference between the primary and the secondary market as she expands for the investors to understand what is all that is being dealt with. Now, I would look at the unit trusts. The unit trusts are in the capital market. They're being regulated by Securities and Exchange Commission, as I've already mentioned. And in the unit trust, I just want to mention sort of the players, the main players. We do have the fund manager, who is a managing company. And then we do have the trustee, and then we do have the custodian. Obviously, the Securities and Exchange sort of overlooks what is happening. They do not get involved in the nitty-gritty of running out the unit trust. Now, the managing company becomes a fund manager of the unit trust. And the managing company could have other activities it runs as a business. But then the unit trust is also a different one. I mean, when it's just dealing with your unit trust, it becomes a different activity. It has got a fund manager who deals with that. So it sort of got its own powers, which are separate from the managing company. So in fact, the unit trust, although it's not yet established there in the Securities Act of 2016, it has to be incorporated with the Ministry of Land under Land Succession Act. That's the incorporation certificate it gets. The managing company, yes, it's registered under PACRA, but the unit trust, it's registered, incorporated under Ministry of Lands through the Land Perpetual Succession Act. Well, those are all legal terms. But if there are legal people here, they know what I'm talking about. I think it's called Land Perpetual Succession Act. You need to be registered there to be sort of become a legal entity as a unit trust. Other fund managers have registered, but if you are running this unit trust and you're not registered, I would encourage you to be registered. However, I know it's not yet in the Securities Act, but that is what is expected to be done. Now, from there, from the fund manager, we now have the trustee. The trustee is sort of, it takes the responsibility of the unit holders, just like what Lina has said of the stock exchange, that you go through a broker. Not each individual investor goes to Lusaka Securities Exchange. It's no longer Lusaka Stock Exchange. Lusaka Securities Exchange. They go through a broker. So the trustee is sort of the one who deals with the fund manager and also monitoring what is being done to the investments of the unit holders, the investors. There are many investors. One fund manager could have about 5,000 investors. So the trustee sort of follows what's happening and he briefs the investors things that are happening to their money. There are several ways that is done. So that means the trustee becomes the legal owner of the investments. He becomes the legal owner, and those investments with the custodians, they must be registered under the name of the trustee. They are registered under the name of the trustee. Well, I'm speaking from a trustee as AMG Global Trust Limited. So AMG Global Trust Limited, that's how those investments are registered. And the register and the trustee holds those investments on behalf of the investors, the many investors. Now, the investments has to be put into custodian, into the banks, which are recognized and approved by the regulator, Securities and Exchange Commission. Not every bank is considered to be safe. No, not only safe, is considered to carry out that function. But the many of them could do that, but that is a function which Securities and Exchange carries out. Now, having said so, even given the distinction of the functions and seeing that the funds are being taken care of. Now, first of all, I must also apologize that I'm at home at the moment. I haven't gone to the office because of other problems which are happening at home. And I was unable to prepare what I can share on the screen, but I hope as time goes by, I'll be able to post that exactly when I'm done it. Now, the fund manager, one of the things what the trustee looks at is that the fund manager cannot invest into related parties. For instance, the fund manager might belong to one institution which has got many different companies, a group of companies. The fund manager cannot invest in any of those companies, getting investors' money and putting into those related companies so that those companies progress whatever they are doing. And for that to be done, they must have authority from the trustee. The trustee will go through and carry out a due diligence and see how it is being done. And it must be at arm's length. But in a situation where the fund manager did invest without the approval from the trustee, this becomes a serious case. And this is referred to the Securities and Exchange Commission, the regulator, to see what can be done. There are many options that can be carried out because it's a serious offense. Investors put money, and you as a fund manager, you give your fellow companies to run their businesses, and maybe later on they might fail to pay back or something like that. That's not trustworthy. So we need to find that the money is placed in places that are right. So what's one of the things that the trustee carries out? He monitors to see where the funds are being placed. And every month, however, one of the things that make sure that the funds are being taken care of is that every month, a report of the investments by each fund manager must be sent to the regulator and to the trustee so that we know exactly where the money is and where it's seated. Obviously, we expect things to be done in a correct way and 100% correct. But anyway, the other cases we will deal with. Once I get to the end, I'll deal with that. And these reports are monitored on daily basis. So every month we are monitoring what's happened, and we know exactly how much each fund manager is holding, the investment is holding. And then apart from that, the trustee carries out periodical review meetings with fund managers so that you get the things firsthand, you get clarity and so forth. Periodically, these review meetings are held on so that we know exactly where we stand. But in situations when a review meeting is being carried out, matters come out and it could have created sort of instability or create problems, then the trustee can go in there and carry out some audits, inspections. And if it's so serious, the matter is elevated to higher places so that a solution could be found out. I'll get to that as we progress. apart from that, apart from the trustee, the regulator also carries out inspections on the fund managers periodically. They carry out it so that the investors are not sort of deprived of what they expect. So that they carry out those inspections, they carry them every now and then so that nothing is taken out and misapplied and used somewhere. Everyone, that means all of us, we've got functions, roles to carry out. And as I've already mentioned, that the trustee is sort of the legal owner of that investment. And the trustee will make sure that all the requirements, the regulations are followed, and to ensure that the return to each investor is according to what was agreed before the investment went into the fund manager. If it was 10% plus 2%, making 12%, that must be paid in full, without any deductions and without any delays. The investor must have his or her money, what he invested in. So there is nothing like negotiating when you want to redeem. All that you invested must be paid back to you in good time and at the right time. Obviously, as I've mentioned, that way, at the times where the trustee, from what's happening in the market, becomes suspicious that there's something wrong happening with a fund manager. And the meetings are called to try and review and get clarity of what's happening. But in a situation where the trustee is not confident, you will now apply, taking the law, to have the license of the fund manager revoked. And this has happened in the past. At least you know certain companies, fund managers, where licenses were revoked. The trustee was able to negotiate or not negotiate, to inform the regulator there's a problem here, and the regulator goes in and so forth and so forth. And the number of work is carried out, licenses are withdrawn. Then at that time, once the license is withdrawn, the trustee appoints an interim manager to run the affairs so that the investors do not lose anything. They get everything that they've invested for. And so that each time they want to redeem, they get their investment in time. And furthermore, the trustee, since he is the legal, well, sort of a legal owner of the investment on behalf of the investors, the unit holders, the trustee can institute legal transactions, can commence taking the fund managers to court. Well, I don't know when we say legal, well, taking the fund manager to court, take them to court and sue, and so that he gets the money back in time. And where the fund manager finds that is a problem somewhere, it is the responsibility of the trustee to follow up the matters using the legal process so that things are done to the satisfaction of the investors. So that the funds of the investors are taken care of. That's one of the things that happens. And the other way, so that also, because the investor, at times the investors, they do not have time to see the trustee, or maybe there are other problems and so forth. The trustee ensures that an annual general meeting is held so that all investors are invited to come and participate, ask questions, clarity, so that everything is done perfectly. So which means annual general meetings must be held every year, so that the investors can go and ask questions and get clarity and know exactly where they stand. So that's one of the ways to make sure that the investors know that their funds are being taken care of. Now, moving on, apart from the annual general meetings, the trustee will also ensure that the investors receive their statements every month of what is being held with the fund manager. So they must receive their statements so that they know exactly what is there. In the past, we used to receive bank statements, but now it's digital. So they can receive that using computers or laptops or smartphones. They must receive their balances every month. They know where they are. And if there's a transaction that goes on before the month end, that should be notified to the investor. We are pushing for that so that the investors know exactly where they stand with their investment. Yeah, in addition to make sure that the investors in funding is being taken care of, is that apart from the Securities Act of 2016, we do have a trust deed. A trust deed between the fund manager and the trustee and the custodian. I'll come to the custodian later on. And the custodian sort of lays down the roles and the responsibilities of each party so that we know exactly what we are supposed to be doing. So that no one will say, no, I never knew anything, I don't read the law and so forth. But this trust deed is very important so that each party follows their roles. And if those roles are not being taken care of, each party can sort of take action against the other. So the trust deed is very important. Every fund manager who's running the unit trust must have a trust deed. Apart from the signatories, the trust deed is the fund manager, the trustee, and the custodian. Apart from that, there's also what we call a custodian tripartite treaty or agreement, where the custodian says, look, I'll receive all the money from you, but the trustee must be part of this so that the trustee knows exactly where the money is. And the trustee can, then the trustee, since he has got the powers, is the legal owner, can also pass instructions to the custodian and say, look, stop dealing with these managers, stop, sort of removes them as signatories. Because the trustee, he sort of gives, oh, sorry, I don't know. Rosalind, are you coming in? It's sort of the trustee, he gives him a power of attorney. He gives the fund manager a power of attorney to run the bank accounts. I mean, you're given a power of attorney on behalf of the investors. I mean, the trustee sort of gives the power of attorney so that there are no bank accounts, new bank accounts being opened or money transferred from one fund to another without the approval of the trustee. So the custodian actually knows that this money cannot be transferred to this other one, or this money can be put in this way. And the other thing is that the man which is a custodian, each fund, because the fund manager could have different funds, 3 or 5 funds. Each fund should have a collection account and a payment account. There must be no mixing that, no, this money was for unit trust, but we used it for the bond. Each fund must transactions on their own. And where there's a mixture, whether these funds are being mixed, then that's when the trustee moves in and if it contemplates of withdrawing the license, the fund manager's license. So all these things are being monitored every now and then. So that means that the power of attorney is given to the fund manager so that things are not going away in such a way that the investors lose their money. Yes. And one of the things that also does take place is that, like what has happened right now, is that the regulator sort of educates or updates the investors. We know exactly what is happening. You have been updated. You know what is happening in the capital market. There are workshops like this. This is not the only one. We've had quite a number of them. Now, because of this COVID-19, we have gone virtual, which is also good, and many people can attend, which is going virtual. But the regulator wants to make sure that the investors are taken care of. Because the capital market, as what Lena has been explaining, it's very important. It is where people, companies, businesses, if they want money, they go to the capital market. They get money. And this is going to an effect on our economy. It develops our economy. Now, but if the capital market is shattered, it means the repercussions go a long way. So that's why the Securities and Exchange Commission make sure that the capital market is taken care of. There are many players, not only those who are in the capital, even people who are outside, is what Lena did show us, other sectors who are involved, outside the capital market. Now, I won't talk too long. One other thing that we need to know is that as a trustee and the regulator, we have asked the fund managers through their association that we want unit prices to be published nearly every day or once per week, in the same way LUSE is doing, Lusaka Stock Exchange is doing. You know the prices, you know what it is. So we want to see how much they are paying out, the unit price, so that investors are confident of what they are doing. If you want to move to another fund manager, they will do it. If others want to join you, they will do that. So we like this to be done maybe once or twice in a week. This is a thing that is required so that the unit holders, they know exactly where they are. Now, coming back to what I was mentioning about the custodians, that they keep this money. The custodians are merely holding the money on behalf of the fund managers who are doing that for the investors. Now, what happens is that the report which they give of what is being held, the custodian gives the report as well to the regulator and to the trustee. This is what we have from this fund manager for this month. And if there are differences, there must be an explanation from the fund manager. Why is this happening? At times, obviously, one of the things that could also be due to time lag. The fund manager might have cash or whatever it is with them, but hasn't gone to the bank as yet on that particular day of reporting. Those things will come out, but eventually we get to a point where they reconcile. So that means we are monitoring these things to make sure that the investors' money is being taken care of. Now, once the money is with a custodian, the fund manager has got many places. It sort of, let's say, involves with other markets. If you go into money market, you go into capital market, the fund manager can buy even treasury bills. I think those are with treasury bills. I normally say that with Bank of Zambia, but that's I think I suppose that's a money market. They can keep money in the bonds. They can buy equity. These are shares in the Lusaka Stock Exchange. They can buy property. They can buy property, assets. I'm not sure there's a property market. I don't know what it is called. They can buy property. They can also put some of the money into microfinance companies. People want money and loan it out in such a ways. And some of the money, obviously, if they get authority from the regulator, They can even invest outside the country, but would encourage all investments to be done here locally. Now, obviously, at certain times of the year, when investors want to redeem, there could be a few delays, 3 days or 5 days from the date the notification was given for redemption. Now, this could be due to a few elements. One could be that the redemption it's not sort of instantly. That's why the fund managers give a higher return if notice is given. But if it's not given, I think there's a penalty. I think even the money market, that's the same thing. If you put your bank in a deposit, 30-day deposit, and you go after 15 days, obviously you lose something. Anyway, if we had said so the redemption will go according to the timeline that you have agreed with. You cannot, if you bought treasury bills, you cannot go following day trying to withdraw treasury bills. There's a process of getting that treasury bills. If you put money in fixed deposits, there's a process that you need to go. If they bought assets, houses or offices, whatever it is, obviously you need to sell those assets so that you get your money back. So in all of it, there's a process of getting to what you require. Now, before I even that, I don't know, have I exceeded? If I've exceeded, I can stop.
Yes, Doc, I'll give you a few more minutes. I'll give you 2 more minutes to wrap up,
Okay,
because our next presentation is waiting.
Oh, yes, no, thank you very much. Yeah. So it is very, it's very important that the investors know what is happening, what is happening in the market and with their fund. And also the other thing we'd like to also mention is that we have asked the fund managers that they need to inform the public what they are doing. Adverts need to be put in the paper. Of late, we haven't seen much advert put in the paper by the fund managers. However, where a situation arises, where a prospectus or an advert is put in the paper, they must have clearance from the trustee and the regulator, so that what goes out to the public is not distorting or giving false information. Well, obviously they don't want to give false information, but to make sure that the investors will understand what it's all about. Because the trustee and the regulator, obviously to some extent the custodian, they want to make sure that the investors' money is taken care of and they have their returns when it's required. So that if you invest for a long period, obviously as Lina had said, this is a long-term investment. If you want to retire, you will retire in 20 or 30 years from now, and you are investing in unit trust, yes. When the time of retirement comes, you should be able to get your money. Yeah. Well, I will leave it here and hold it over to Tali.
Okay, thank you so much, Doc, for that presentation. I take it we now have more knowledge on what the roles of the trustee in this market are. Doc, we have a question for you from Luyando Hamatwi. Luyando is asking, are you able to share more on registered unit trusts worth investing in? And then I also saw a hand from Professor Nelson Transa.
Yes.
Doc, could you take that? Or Professor, maybe you can also speak.
I think the first question was how, can you repeat the first question once again?
Are you able to share more on registered unit trusts worth investing in? Or maybe we can ask Luyando to speak just to explain what
I think so.
is.
Yes.
Luyando, could you go ahead and ask your question?
Okay. Hello, can you hear me?
Yes.
Okay, hi Doc. Thank you so much for the presentation and explaining what unit trusts are and how they operate, the fund managers and trustees. And are you able to maybe give maybe about maybe 5 or so, maybe just some unit trusts registered that are worth investing in?
Okay, thank you. Yes, I know the unit trusts, which are registered and approved by Securities and Exchange Commission, but it would be unfair for me to give you, these are the better the ones. I think we leave it up to each investor sort of to carry out your sort of due diligence, but otherwise, as far as we are concerned, they're all okay, yeah.
And Leandro, maybe just to add on to what Doc has said, we do have a list of registered brokers and fund managers on the SEC website as well as on the LUSE website. So you can visit the website and you see the list there and you can make your decision.
Oh, all right. Thank you so much. I'll check the site just now.
Okay, thank you.
Thanks,
Professor Nelson, would you like to speak? I've seen your hand up. If not, we can go straight into our next presentation. This is on secondary market trading of government securities from Atlas Mara.
Good morning, actually. Good morning, study.
Morning.
Okay, my name is Richard Ndlovu. I'll make a presentation on the secondary market trading of government bonds. By way of introduction, I work under global markets and treasury at the bank, and I'm currently heading the trading team, and I'm responsible for fixed income trading. So that directly feeds into something that I do on a daily basis. Yes, so I'll share my screen just now. Okay, I hope everyone can see my screen.
Yes, we can.
Okay. Oh, okay. Lovely. So yes, obviously the topic is government securities trading, and obviously this is just a focus on government bonds issued by the government of Zambia. So to go straight into it, maybe just a bit of introduction as to who we are. Obviously, we are owned by the Atlas Mara Group with headquarters in Dubai. And the group has got a presence in a few other countries in Southern Africa and Rwanda. So just in terms of a few names that are part of the group, we've got Botswana, Mozambique, and obviously West Africa, Nigeria, then Rwanda, Tanzania, Zambia, and Zimbabwe. And then about Atlas Mara Zambia, obviously this is an entity that has come together after the merger of Finance Bank in 2016 and Bank ABC. Obviously, as one of the commercial banks operating in this country, we've got quite a large footprint. We've got quite a number of branches dotted across the country. I think you are almost able to access us in almost all the provinces in this country. Then as part of the, in terms of the Atlas Mara Zambia, obviously, which is the trading name, the legal name being African Banking Corporation Zambia. There are a few subsidiaries that make up that group. Some of those are Microfinance Zambia that obviously a lot of people on this call might be aware of, and we've got and then we've got African Banking Corporation Investments Limited, which is one of our unit trusts, which is also part of the group. So that slide there just gives an appreciation of where the two banks that merged to make Atlas Mara are coming from. And then obviously in terms of the timeline, how everything, how the whole merger happened, obviously we started in 2016, Finance Bank came on board 2017, the two banks merged, and 2018 to date, we have got one name, one legal name, African Banking Corporation, trading as Atlas Mara Zambia, which is the merged entity. And from 2018 onwards, obviously we've had to rebrand to the new name. And on that slide there, you can see just how beautiful some of our branches across the country look like. So we've done this across all the branches, and as part of the whole process that happened, some of the branches in areas where Finance Bank and Bank ABC existed merged and made one bank per location. So like I indicated, we've got quite a number of them dotted across the country. So with that said, I think straight into what might be very much relevant for this presentation. We want to, what we are trying to achieve, the core of what we are trying to present this morning is just to raise awareness per se in terms of the opportunities that exist in the secondary market for government securities. We know to this point that the issuers of the instruments, that's the Ministry of Finance, and together with the agents, the Bank of Zambia have done quite a lot of awareness across various platforms, TV, radio, billboards. I've seen quite a number of billboards in Osaka where they're encouraging people to invest in securities. So in terms of awareness, I think it will make our work quite light in that there's been so much said to this point. And basically where we just come in is that we want to drive an appreciation of exactly what investing in government securities would look like for any sort of investors, be it individual or institutional. And then how would we probably just come in as a bank in terms of driving that same proposition. So by way of introduction, of course, government securities, these are long-term debt instruments which are issued by the government, and in this case with a concentration on the government of Zambia. And they are quite an attractive asset for clients of any type, institutional, individual, and that is because they offer a steady stream of income. So once you invest in these government securities or government bonds, you more or less like have a steady stream of income, which would be fixed over a certain period of time. So with certain cash flows expected over the life of that particular investment. So generally, what do we have on offer in terms of of these government bonds that we are making reference to? Obviously, they are Kwacha instruments. And like I've alluded to already, they offer a fixed and regular coupon payments, which are made semi-annually. And obviously the repayment of the principal, which comes at the end of whatever period you've invested for. And compared to so many other investments that you have in the market, investment of similar risk, you find that government bonds offer quite competitive yields. I think if you've had the chance to look at where most of our government bonds are trading, even off the primary market, you appreciate the fact that the returns there are quite competitive. And even when you cross this over to the secondary market, it's not different. We play in that market and we're able to offer those very competitive yields. And in terms of the other aspects, like if, for example, you approached us and you said you wanted to invest, within what period would this investment begin, which is the transaction date or the standard value date from the time that you approach us for this to be done. I will go into that maybe in the next few slides. And of course, one of the advantages is that, once you invest in these government securities outside of the fixed income that you are going to get over the period, you've also got a very set maturity period on which you know that your principal will be repaid. So as far as it goes in terms of planning, I don't think you can look in terms of knowing, say, for example, you've got something that you need to pay for in 2 years or 3 years or 5 years, or just for you to enhance your earnings over that period. You know for sure to say on this particular date, my investment will mature, and then it will allow you to plan beyond what you can do with your money. So in terms of the benefits, I'll go back to this after I just go through the specific features of these instruments that we are talking about. Then we can have maybe a more appreciation of exactly what we as a bank where we as a bank come in, and what sort of benefits we can offer to you, or just generally what sort of benefits exist in you investing in government bonds. So in terms of the, obviously left this slide in terms of the treasury bill market, and the next few slides obviously will be more specific to the topic at hand, which is government bonds. But I deliberately just tried to beam this slide so that we do have some sort of appreciation in terms of how we sort of graduate to the more longer term instruments in government bonds that we have. Obviously, in terms of talking about the capital markets and what sort of instruments we should be concentrating on, obviously it's on government bonds, but there is obviously the more short term, and in terms of the features, they are a little bit similar with the bonds, which obviously is our topic of interest. So I'll more or less just summarize this. Obviously, treasury bills are short term, and I want to obviously go into this just for people who would want to ask, but what's the difference between T-bill and government bonds, and why government bonds? Obviously now the concentration is in capital market instruments. So treasury bills are short-term in nature. Obviously, also debt instruments issued by the government. They are short-term in that the maturity only goes up to 1 year. That's the maximum. And they are issued in tenors of 3, 6, 9 months in between to 1 year. So this allows you to invest for a very short term, depending on what the need might be. So on the next slide, now we concentrate fully on what we should, which is on the capital instruments, in this case, government bonds. I've already introduced what government bonds are, which is that they are long-term debt instruments issued by the government. And they, in terms of, the question is obviously why invest? Other than looking for returns, which obviously are very high in government bonds. Other than that, it would also allow you to obviously reduce your risk, depending on where else you are investing, whether you're investing in stock or you're investing in any other assets. Government bonds would be an alternative instrument that would allow you to diversify your portfolio and obviously lower your risk. And like I've alluded to already, they offer a better return compared to most of the other instruments that you have of the similar nature or similar maturity periods. And if compared, say, to, obviously treasury bills are more short term. If you compare it to most of, fixed deposits, which are obviously facilitated through banks and other microfinance institutions, you find that they quite, compensate you very well for the for the period you decide to part away with your cash. And obviously, most importantly, they offer higher levels of liquidity, and this I'll go back to. I think the previous slides that I've looked at did allude to the fact that you get a steady stream of coupon over the life of these bonds. So that allows you to get in the much needed liquidity before the maturity date of the instrument falls due. So, and then most importantly, or maybe not most importantly, maybe just the last point, which is of equal importance with the other ones that I've referred to, is that there is an opportunity for you to trade these instruments, and this is where we come in. There is an opportunity for you to trade these instruments. You don't have to hold them to maturity, and depending on the movement in the interest rates over the period that you are holding, you can either, and most likely, depending on what you're trying to achieve, if you're not just stressed and you want to come out because you've got some liquidity needs, you can watch the market, watch the movements in the interest rates, and this can allow you to profit from those interest rate movements and obviously make a capital gain by merely just investing in these instruments. So what are some of those returns that we have, or what are some of the returns that the government bonds offer? So government bonds offer two streams of income. The first one is the first stream of income that they offer is the coupon income. Obviously, the coupon rates are fixed and they are paid semi-annually. And in terms of, if I was to give you an example, I say if you invest in a 2-year bond, the 2-year bond offers a coupon at 9%, which is fixed and will be paid every 6 months over the life of that 2-year instrument. And then the other income stream that you have is the discount income, which is just the difference between the amount you are willing to part with today and the amount you get at maturity. So at this point, I think it's also important for me to mention that government bonds are discount instruments. So meaning they are traded at a discount to par. So, and par being 100, of course. And so meaning that anytime you're going to invest in these securities, you'd be buying at a price lower than 100, depending on the interest rate that is quoted on that government bonds. So say, for example, if you intended to invest in a 2-year bond, you would find that maybe the price is 68. So on a price of 68 implies that your investment amount today would be lower, say would be, for argument's sake, out of 100, you would invest 68 kwacha. And then at maturity, you get 100 kwacha. So that's what I've referred to when I've said discount income. So outside of coupon income, you have the discount income, which is the difference between the par and the price at which you would have invested, which you get at maturity of this instrument. And in terms of who is eligible to participate or to invest, everyone is, individual, organizations, be it any sort of corporate institution, be it onshore, offshore. Everybody's more or less like eligible to actually invest in government bonds. But for the purpose of secondary market trading, we limit the minimum amount that you can invest to a 30,000 kwacha. So with a 30,000 kwacha, you can approach us and we can find you an instrument with a term to maturity and parameters that meet your desired needs at any particular time. And then in terms of the conventional maturity periods that we have on bonds, if they are issued at primary market, you have got the 2, 3, 5, 7, 10, and 15-year bonds. However, if you are going to transact in these instruments in the secondary market, what you will notice is that we trade them based on the term to maturity. So I'll give an example. A 15-year bond issued today will mature in 2035. However, there are 15-year bonds that were issued maybe as far back as 2010 that are maturing in 2025 with a coupon of 14% with 5 years to maturity. So in terms of comparable market metrics at which we can compare this instrument in terms of pricing, we'll obviously work with the term to maturity, which is from today to 2025, which makes it a 5-year instrument to maturity. And this instrument will give you a coupon of 14%. You can't get this from the primary market, but if you come through the secondary market, we'll be able to get it for you. So why would this be important? The 15-year bond obviously is issued with a 14% coupon. A 5-year bond at primary market is issued with an 11% coupon. So if you compare the two already there, you find that if you came through the secondary market and you're able to access this instrument, you are 3% better in terms of coupon income. And then you are able to only hold this instrument for the next 5 years, as opposed to the conventional 15 years that you could get if you go to the primary market. So this is where we obviously come in. This is where we try and facilitate your needs with an example that I've just illustrated. So we come in and obviously try and understand what you are looking for, and then we try and get it for you. There are always players in the secondary market, investors all over the country, investors offshore, that are always at any particular point hold these instruments and are willing to trade them. And as a bank, that's where we come in to try and facilitate your access to these instruments through obviously our wider network that we enjoy, obviously being a financial institution. Then lastly, maybe just in terms of the, maybe not lastly, just in terms of the, what would be of importance for us to touch on. Obviously, I've touched on the coupon payment dates and said these instruments pay every 6 months. At this point, I think it's also important to mention that these 6 months that we are referring to, for, when these instruments pay coupon, it's from 6 months from the anniversary date of the issuance of the security. So say if the security was issued today, we would be counting 6 months from today as the time it will pay coupon. Then the question at that point, obviously, that should arise is, if I trade on an instrument in the secondary market whose value date obviously does not correspond to when it was issued, when do I get the first coupon payment? So for every instrument that has been issued and is trading, we are able to get you a coupon payment schedule, which will indicate exactly when your coupon is due, so that in terms of planning, for the cash flow that will be coming through, you can easily plan that. So we'll give you a breakdown of the cash flow from the time you invest to the time that particular bond is going to mature. Then obviously you can plan around that. Settlement, I've touched a little bit on settlement, where we indicated that if you come through us and you approach us today, we normally typically give a 3-day. If you came today as a trade date, then it means that 3 days from today, you have value for that particular instrument at which we are buying. So possibly I have to explain why that is the case. I think typically what you also notice is that the settlement of these instruments obviously doesn't just merely depend on us. These are, and Lena touched on this, and I think she made light work of what I'm trying now to explain. These are exchange traded instruments. So whenever we trade, if we trade outside of the exchange, we have to report these trades to the exchange. So for that particular reason, that's why you find that there is usually a few days between the trade date and obviously the value date of the instrument, because they have to settle through the exchange. And once that happens, then obviously you get the physical delivery of the securities to your account. So then in terms of what charges, and obviously this is very important for an investor, what sort of charges accrue on any investments that you make in government securities? So at the moment, to begin with, they have got the handling fees, and the handling fee at the moment is 1% of the, and this is only charged on coupon, on the coupon income. Remember, I did refer to the fact that you've got 2 income streams on bonds, which is coupon and discount income. The 1% is only charged on coupon. So if you've invested, if you've invested whatever amount you've invested, and your coupon at any particular time that you're going to receive is say 100 kwacha, it will be 1% of 100 kwacha. That would be the handling fee. Then 2, there is withholding tax applicable on coupon income on government bonds at 15%. So again, it's 15%. If I refer to my previous example, 15% of 100 kwacha is what you'll be charged as withholding tax. And at this point, I think it's important to note that the handling fee and the withholding tax are charged at source, or they are deducted at source, implying that what you be paid or what you receive in your account will be net of these 2 charges, handling fee and taxation. Then 3, obviously there are LUSE fees applicable on every transactions that you do in the government securities. LUSE has got, they've tiered the fees according to how much. So this is readily accessible through the Lusaka Securities Exchange. And anyone who is intending to make any investments in government bonds can access this. I think it should be on their website as well. So anytime you have a chance, you can browse through to know exactly what sort of fees you'll be paying for this kind of trade. Then lastly, in terms of the fees, you've got the SEC fee, SEC charge on bond, commission on bond trades. And this is charged at 0.125% of the cash amount on both the sell and the buy leg of the transaction. So what do I mean on both the buy and sell leg of the transaction? I hope I'll explain this as good as I can, and so that I don't get in trouble with the SEC for misrepresenting them. But what this basically means is that any party to the transaction, if I'm the seller of this instrument, I'll pay 0.125% of the cash amount as a seller. And the buyer will also pay 0.125% of the cash amount as a buyer of the instrument. That's what this basically means. So I think this one, obviously, is something that you can work out at the very point you decide to make any investments in government bonds through the secondary market. You can calculate this prior to you even committing to anything, so that you know exactly what sort of fees will be applicable. Lastly, on that slide, we've basically just tried to, to just put together everything that I've just been alluding to: coupon, investment amount, face value, maturity date, value date, and all those kind of details. I've just tried to come up with 2 scenarios that can make someone appreciate what I've tried to, to speak to a little bit more. So the first scenario there, I've assumed there is a bond maturing in 2024. So that is 4 years to maturity from today to 2024, slightly less than 4 years because it's May 2024 as opposed to October 2024. So that is an unconventional term to maturity, which you can get through the primary market, as you can observe. And then this particular instrument was issued originally as a 10-year instrument, meaning it's got a 13% coupon. But in terms of you trading it today, you trade it on parameters comparable to an instrument maturing in 3 or 4 years' time. And I've assumed a yield to maturity of 32%. So if you had 100,000 kwacha to invest, your investment amount will amount on that 32% yield to maturity, your investment amount will be 65,000. And with a face value of 100,000, to your right there, I've just tried to depict what your cash flows will look like. So on average, every 6 months to 2024, you get about 6,500 kwacha every 6 months. Gross, that is gross income. So if you throw in the withholding tax, which we said was 15%, and if you throw in the 1% handling fee, on average, you'll be getting about 5,500. And over the life of this particular instrument, you get a total of 105,000 from your 65,000 kwacha investment. You invest 65,000, you get 105,000 kwacha over the life. And I should also mention that remember that you are receiving these coupons before maturity date of the instrument. So depending on the prevailing market conditions at the time, you are able to reinvest these coupons and even earn higher interest. So you can compound your interest before actual maturities falls due. Scenario 2, I've again assumed 100,000 face value, which gives you an investment amount of 71,000. And this is an instrument traded at a yield to maturity of 31.5%, maturing in May 2023, which is just about less than 2 years. Again, an unconventional period because you don't get this from the primary market. So listed there would be your gross coupon. That would be the withholding tax, and that would be your net coupon. Then if you notice at the end, which is corresponding to the maturity date of the instrument, you are receiving both coupon and principal. So in our second scenario, you would have invested 71,000, you get about 105,000. So basically, in terms of how the cash flows work on these instruments, I think the two scenarios given there more than shows what you are likely to get. So again, these are just for illustrative purposes. The yield to maturity quoted might not be exactly where we are trading, but they are merely for illustrative purposes. And maybe at this point, then I can go back to the first slide where we started from. In terms of generally, what are just the benefits of you investing in bonds? So we've already alluded to the regular payment of coupon, which you get every 6 months, and the fact that this coupon will give you much needed liquidity before the money that you've actually committed, which will come at the end of the period, comes through. You have the coupon to fall back on in case of any pressing needs. Then obviously we spoke about the issue of capital appreciation, which is depending on where interest rates are in the market, you are likely to have a capital gain on your investment. And generally, for any sort of investor, be it individual, corporate, or for whatever reason you're trying to invest, government bonds are a good way of saving for a future expense. Be it you're looking to come and pay your children's school fees, be it there's some property, anything that you want to save for. Government bonds are a very good way of doing that. And obviously, these are very low risk investments. And I'm even being, maybe I'm not even describing this the way it should. Maybe I should just say they are, they don't have any risk at all. They are risk free, as is always referred to even in the textbooks. Basically because the government always pays you. I haven't seen or read anywhere any scenario where the government of the Republic of Zambia has failed to honor maturities on government bonds. I think they've done this, and for that reason, and remember that government will always exist, and for that reason you are guaranteed to always get paid. So they are risk-free investments that you can invest in, get your returns, save for a future purpose. And that is about it from me. Maybe I can just leave you with the last slide just for you to read through in terms of how else as a bank we can assist you in your journey to either protect your investments or earn something on your match, earn something on the money that you've worked very hard for. That's all from me. At this point, I can invite questions.
Thank you so much, Richard, for that presentation. So we actually have a question. How can one access the information that you've just shared? You've shared quite a bit, quite a lot. So there's a question from Mr. Kapata Moyo asking how they can have access to this information just to familiarize themselves with the secondary trading of bonds.
Thanks for that question, Stali. Yes, so in terms of, we are very much accessible as the Global Markets and Treasury at Atlas Mara. In terms of, you can reach us either via phone, you can reach us even on email. That's information that can easily be provided. And we can be accessed even through our branch network. Just walking through any of our branches, our contact details can be shared. And yes, I do understand that sometimes information like this does tend, especially in a presentation so short, does tend to be too much. We are always willing to have a bilateral chat, one-on-one, to just try and break down everything that we've spoken about so far, to obviously just make someone have a full appreciation of what they would be getting into. So yes, you can reach us via phone. You can reach us through our branch network. They can advise our contact details. And if anyone wishes, we can make this presentation available to them through obviously SEC. It's something that they can read through at their own time as well.
Okay, thank you for that, Richard. Any other questions for Richard?
Actually, there's a question in the chat, and it says, "Are these bonds available to individuals living abroad?" And also to Richard, I think there's need for you to provide contact details just now.
Okay, I'll begin with the first question. Are these instruments available to individuals living abroad? Yes, they are available. However, what I have to point out at this moment is that if you are going to invest through us, then we would have to carry out due diligence on you. And for an individual, because we recognize that for an individual, it's not difficult to open an account, we request that you open an account with us so that we've got all the KYC documents on hand for you. Then you can begin the process of investing. For a corporate entity, it's a little bit different. Obviously, minimum KYC is what we would just desire. And on the basis of that, we can proceed to carry out any trades. So to speak to the question of whether this could be available to those living offshore, sorry for that. So if yes, it is available. However, what might pose a challenge is how do we get you to open an account with us for us to have the minimum KYC on hand? But that's a discussion we can have outside of this forum. And I think with the help of our compliance team, we can try and see what sort of requirements are needed from you for us to have to onboard you. So yes, you can invest. You can actually invest. Then in terms of the contact details, unfortunately, I can't. They are not on the slide, and maybe I can put them. I can put them on the chat, right?
Yes, I was going to
Okay,
suggest.
so I'll put both the phone number on the chat as well as an email, a group email address that can reach all the team members in our treasury team. So I'll put that on the chat.
Great. Thank you for that response, Richard. Any other questions for Richard concerning the secondary trading of bonds? Nelson, do you have a question? I can see. Okay, maybe Nelson has a problem with his mic, but I see he did type a comment in the chat. But this question is directed to Doc and the SEC. He's asking, how does the SEC and the board work together to regulate financial players in Zambia, as in time and frequency, in relation to the functionality of unit trust institutions and AMG, which you hold at the pinnacle? That's for Doc. Dr. Nyambe, are you still with us? Okay, I've put the contact details for Atlas Mara in the chat for everyone to see. And then maybe while we wait for Doc, we also have another question for Lena. This question is coming from Facebook.
Sorry, I missed the question.
Oh, okay. Just a second. Okay, so it was what's his name? Nelson was asking, how does SEC and boards work together to regulate the players, that is in relation to the functionality?
Sorry, I can't follow.
Trust.
Repeat again.
How does, okay, maybe let me put it in the chat for you, but he's asking how both the SEC ourselves and the Bank of Zambia work together to regulate the functionality of unit trust institutions and AMG Global, that is you as a trustee.
Oh, how can we can work together to regulate?
How does the SEC and the boards work together to regulate the space of unit trust? That's what he's asking.
Oh, thank you very much. Well, what happens is that the SEC is the administrator of the capital market, and for anyone to start operating a unit trust or to get into the capital market, you need to be registered with the Securities and Exchange Commission. And as I had already indicated, that Securities and Exchange Commission is composed of people with the capacity, knowledge, and the qualification to understand and able to assess whether that business is viable to bring sanity to the capital market. So they do the assessment and then they issue a license. And of course, there are certain procedures which need to be followed. And then the Bank of Zambia, it is a regulator of the money market. It depends on the fund manager whether at the same time is regulated by the central bank. If it is a financial institution like a bank, but operating at a unit trust, yes, they'll be regulated on the aspect of the banking sector. Now, for the development and the strengthening of the capital market, there will always liaise between these two regulators. Normal interact and share a number of issues, especially when problems arise. They share the problems and they work out modalities of working it out. And this has happened several times. I mean, this has happened even in some of the cases we are looking at. We're interacting with the Bank of Zambia and the regulator, Securities and Exchange Commission. And we're working out to a good solution to protect and provide the returns the investors want. And because of that, the trustee also gets involved because sort of interacts with the two regulators and they work out something that is of great benefit to the investors. So these two, although they've got different roles and functions, we can always coordinate and work out the things that are good for the market. And as Lena from Lucy had mentioned, to show that we've got different markets. We've got the money market, the capital market. We've got, I can't remember the other one. We also got, maybe we even talked about a property market and so forth. So all these, in fact, the ones which form the capital market, sort of form the capital market. There are many players, they're sub-regulators. So they work together for the benefit of the country, so that the capital market is strong, and the finances are there for people who want money for development. So we are sort of working out together. I hope I've been able to explain.
Thank you so much, Dr. for that. We have another question. This one is for Lena, and this is from Facebook audience. Mr. Michael is asking, what type of shares are traded on the exchange? Is it common stock or preferred stock?
Okay, that is for
Thanks for
Lena.
the question. Yes. So on the exchange, it's common stock. There's only one exception to that, which is there's a company called Real Estate Investment Zambia. We call it RAISE for short. They have listed their preferential shares, their preference shares. They're called, they used to be called known as Farmers House, so they're called farm preferential shares. They're also listed on the market for trading as well. That's the only company. Besides that, all the other companies, it's common stock or common shares. Thanks.
Okay, thank you for that clarification, Lena. Okay. I don't see any other questions unless we have any comments or additions. I would like to just thank our presenters for today, and thank you, the audience, for joining us in our virtual exhibition where you got to meet some of the players in the market. I'll just go through the program for tomorrow and mention that we are starting again at 10. And tomorrow you will be able to learn how to invest in shares. And this time you'll meet a broker. We have stockbrokers in the house tomorrow. And then we'll also get to learn how to save in unit trusts. We're going to meet a collective investment scheme, that's Altus Financial Services. And then we're going to get just an overview of how to be a smart investor and how the capital markets can enable smart investments. This is going to be given by the Capital Market Association in Zambia tomorrow. At this point, I'd just like to thank everyone for joining us, our presenters and our audience, and invite you again tomorrow at the same time. Thank you.
Thank you, Sitali.
Thank you.